Hello and welcome to our 10th Annual Homeownership Conference. My name is Gabriela Munoz. Welcome to our topic for today, struggling with your mortgage options. Let's get a better understanding of what they are. So I'd like to thank our sponsor for today's workshop, Silicon Valley Bank, one of our platinum sponsors for today. Again, my name is Gabriela Munoz. I am one of the homeownership specialists here at VCCDC. On a day-to-day, I'm meeting with clients, helping them through their different financial goals, whether it be to purchase or teaching our home buyer education classes, meeting with homeowners who might be trying to refinance and improving their credit, or such as today's topic, getting to understand what your mortgage options are should you be struggling. And here with me today as well is Stephanie Moreira, who's also another counselor who works with me. Stephanie, do you want to give us a little bit of information about yourself?
Hi, yes. So I'm Stephanie. I recently became a homeownership specialist here, and I'm very excited to be doing this presentation. So let's go ahead and get started with today's purpose and goals. Presentation is to provide education to homeowners facing default or foreclosure, along with providing information, guidance, and resources on the options that might be available to homeowners in this situation. Next slide. So first, what to do in a financial crisis. For one, budget is key. This is one of your foundations to your home. We want to revisit it and try to create what's called a crisis budget, trying to cut out all the extras, all the wants, and stick truly to the needs. Keeping your utilities on, trying to pay your mortgage, keeping food on the table. So one of the resources we can look into is 211. 211 is an easy way to connect with our available resources. We can connect it to utility assistances, food pantries, to try and reduce the grocery bill in this moment. There are other agencies like the Catholic Charities that have assisted in the past, and another important step is to take is to call your mortgage lender. You need to call your servicer to see what your options are, what kind of assistances they have available for you. They also are required by law when you say you're having difficulties with the mortgage to connect you with a HUD-approved agency. When you get in touch with your local agency, we're on top of what the options are to walk you through and explain what the process could be. So now let's talk about who's involved in your loan. You'll have the investor or the loan owner, and that would be the person or the institution that's invested in the mortgage or the mortgage-backed securities. So I recommend having your servicer look to see if your loan is held by FHA, VA, USDA, Fannie Mae, or Freddie Mac, if you don't already know. And we have the mortgage servicer. This is the company that is administering the loan. They are the ones collecting the payments, keeping records on the account, and computing the interest and principal. Lastly, we have the servicer representative. This is the person you speak to when you call for any reason on your mortgage. Now, I'm going to pass things over to Gabriela, and she'll be going over more in detail on the options that could be available. Gabby?
So before we go through the actual options, I like to clarify the foreclosure timeline. So combining that with the information Stephanie just presented again, it's so important to make sure you understand how your loan works, but also how does a foreclosure work. So in essence, the very first thing that happens before a foreclosure can begin is that we've fallen behind. Once someone has fallen behind on a mortgage by 3 months, the servicer at that point can issue a notice of default. Now, that notice of default is not the letter that they themselves send you saying you're defaulted on your loan. This is a county recorded document. You will get a copy. It has a county stamp on the top that says it's been recorded. That is the official first step to this foreclosure. That notice of default is going to give you 90 days to bring the loan current or come to an arrangement with your servicer. If within those 90 days there is no resolution, there is no application for assistance submitted, the servicer can then proceed with a notice of sale. And that again is something that's recorded with the county, has an official county stamp that says it's been recorded against your title. And from that notice, you're provided 30 days to bring the loan current or reach an agreement with their servicer. If assuming within those 30 days there is no action taken, the home will be auctioned off at the end of those 30 days. So it's very important we make sure to keep this timeline in mind as we go through these options. And again, as Stephanie mentioned, it's so important to make sure to communicate with your servicer from the very beginning. So what exactly are our loss mitigation options? So there's two different intentions. There's the intention to keep the home or the intention to not keep the home. Our concentration for today will be what are your options to keep your home? And the very first thing is a forbearance plan. So with a forbearance plan, what that means is it's an agreement to suspend or reduce the normal monthly payments for a fixed period of time. And so in this case, when do we want to use the forbearance plan? Is when it's a temporary financial hardship. So it's a temporary item that we are not able to afford our mortgage. And so in this case, we need to make sure to contact the servicer so that we can initiate the forbearance plan. It's not something that's done automatically. It's something we want to make sure to, again, connect with the servicer. And because it's a temporary financial hardship, they can hopefully approve it. Now, not all loans have this forbearance plan as an option, but we want to, again, connect with the servicer to find out what the options are. Once this forbearance period, which is normally 3 to 6 months, is ending, you need to make sure to connect with the servicer to resume your regular monthly mortgage payments. Now, forbearance is not a forgiveness of your payments. We do have to pay that loan amount back. So next slide. And we're going to go into the next slide, actually, and into the reinstatement. So coming out of forbearance, if we have the ability to bring that loan current, or maybe it wasn't a forbearance, we just simply fell behind 1 or 2 payments, you can reinstate your loan by simply making one lump sum payment to the past due balance. So this could have been that you were just delayed in getting your check from work. It could have been exiting out of a forbearance, but we had our Social Security, disability, workman's comp income, and we were able to bring money together to be able to bring the loan current, borrowed for family, whatever the case might be. You just simply pay the loan in full, whatever the past due balance is. That would be a reinstatement. That might be a difficult thing to do, especially if we're going through a financial hardship. Now, the other option is a repayment plan. Now, again, let's go back to the example of a forbearance. So we are 3 months past due. We come out of forbearance. Those 3 months are still pending to be paid. We don't have the lump sum to do a reinstatement, but we can hopefully get approved for a repayment plan. So that's the next option there that we can have. With a repayment plan, it's essentially an increase to our regular monthly payments through the course of 6 to 12 months, and maybe sometimes even longer, be able, through our regular mortgage payment, pay the past due. We do have to qualify for this, so there has to be sufficient enough income to support the larger payment. And again, the hardship had to have ended as well. We can't be in a hardship anymore. Whatever the hardship could have been, maybe it was temporary loss of wages, temporary disability, we have to go back and be able to support this payment. Now, let's assume our hardship is more on a permanent basis. So we maybe anticipated it was going to be a short term, and that's why we got into the forbearance, but it turned into a long-term or a permanent situation. So now we're past due not just those 3 months, but maybe more. Or simply it was a sudden job loss that now suddenly we've lost all of our income. We didn't even go into the forbearance options. We have found a new job, but this new job might be lower paying. So this is where it's a permanent change to our financial situation. And that's one example. Loss of wages could be the loss of a borrower, could be many different options that we can think of with a loan modification. So in this case, this is going to be a change in the terms of your loan. So now, as far as what can change, It can be your interest rate. It can be the term, the amount of time you have to pay the loan, or it can be the balance as well, where they do what's called a balloon payment at the end of your loan. Now, we have to have income to support a payment. So we have no income whatsoever. Unfortunately, this is not an option. We have to have income, and that's where they're going to base the new payment off of, is our actual income that we have. Changing these terms around can then make it so that you can get an affordable payment. It's going to vary from investor to investor of what terms exactly they can change. But in thinking of the foreclosure timeline, as long as you have a full and complete packet, the homeowner bill of rights that was created allows us to halt any foreclosure proceedings as long as that full loss mitigation packet has been submitted to your servicer. And so that's the most important part, is making sure you have a full packet. So constantly calling your servicer to see if any additional documents are missing, because we want to at all times have that full packet in their hands so we can fully halt any kind of foreclosure for proceeding. And again, reiterating, as Tiffany mentioned, having that communication with your servicer is so important. Now, the other option is a partial claim, and this is a little bit distinctive to certain loans, and it's also known as a deferral. So if you have mortgage insurance, so with conventional loans that didn't have 20% down, they have mortgage insurance, FHA, VA, Veterans Administration, Veterans Affairs, USDA, US rural loans, they have mortgage insurance. So if you're paying for mortgage insurance, you have fallen behind on your mortgage, but we do have income and sufficient enough income to pay our payment. This mortgage insurance can pay for your past due balance, but again, we have to show clear proof that we can support the payment. So they will ask for that information. Now, it's not a forgiveness of the balance. The mortgage insurance just pays the past due balance now and moves it to the end of your loan. None of the terms change. You still have the same rate, the same payment. The mortgage insurance just paid the past due balance now to allow you to return back to your payments, and you'll pay them back at the end of your term. So I'm going to switch it back to Stephanie so she can go through some more COVID-related options for you guys.
Yes, thank you, Gabby. Okay, so we have our COVID-related options. That's going to be some loans that are eligible for homeowners to request a COVID-related forbearance up until the end of the COVID-19 national emergency. This post-forbearance loan options are for FHA, VA, USDA, Fannie Mae, Freddie Mac. They are the Reinstatement, Repayment Plan, Partial Claim or Deferral, which Gabby had already spoken of these. With that one, there is a limit to the amount that's deferred depending on the investor. There's a modification. With modifications, FHA may send a blind advance loan modification without contacting the homeowner. There's also income-based modification, a traditional loan modification review with FHA's recovery modification, which can be combined with a partial claim, Fannie Mae's flex modification, VA's refund modification. For private loans post-forbearance options, they will depend on your servicer and the investor. Then we have the California Mortgage Relief Program. That one, the state of California was awarded $1 billion in mortgage relief funds to assist homeowners who've fallen behind on their housing payments during the COVID-19 pandemic. And this program also applies to reverse mortgages. So now the criteria to qualify is it has a maximum assistance of $80,000 to cover the past due principal and interest on escrow shortages. Now for loans that, for loans with no impound accounts and delinquent property taxes, borrowers must establish an impound account with their servicer to allow for delinquent property taxes to be paid. The servicer must be participating in this program, and income should not exceed 150% of the county's area median income. There is an income tool check on the website. We can also assist with that if you're interested in not doing that one. They must have experienced a COVID-19 related financial hardship after January 21st of 2020 and must be currently past due on your first mortgage with 2 or more payments prior to June 30th of this year. And the program only applies to first mortgages. They can only own one residential property and the home must be the primary residence. And the program applies to single-family homes, condos, townhomes, and manufactured homes that are permanently affixed. Can I get the next slide? Thank you. All right, so now for some more resources and next steps. You want to create a crisis budget, and we have a template on our website listed here. You can contact your servicer for options and assistance, and VCCDC can assist you with contacting your servicer or reviewing your options based on your loan type. Contact 211 for community resources, like help with paying for current and past due utilities, food pantries, and many more. We have links for the Ventura, LA, Kern, and Santa Barbara counties listed here. And then you can use the loan lookup tools for Fannie Mae and Freddie Mac to see if your loan falls under one of those. And the Consumer Financial Protection Bureau, so the CFPB, has a page dedicated to resources for homeowners and renters. They are closely monitoring servicer conduct, so if you have any issues, please file a complaint there, with the link listed here as well. In addition to this event, we have various workshops every month. We have, whether it be for someone that's trying to buy or someone that's already a homeowner, even if it's a class geared to homeowners, if you're trying to be a homeowner, it's a good class to take. These classes range from financial management, home preservation. Every month there's a different topic that we like to offer. Then we have our coaching services. This is where me and Gabby, we meet individually with families to go through their financial goals, whether they're homeowners or trying to become homeowners. For anyone wanting to purchase, coaching for home buyers is available. We'll sit with you and review your personal finances to see where you are in the purchase process. If you're a homeowner wanting to refinance or simply improve your financials, we can go through that, correct any issues with credit, and get you going with your financial goals. And if you're facing foreclosure, home preservation counseling, we're here to go through what your options are. We also offer lending services. Our lending team is available to connect you with mortgage financing options and down payment assistances. They also offer refinances. All right, so now the questions.
So I've been going through our chat box here, and so please make sure to keep sending us your questions through our chat. If we might not answer it on the workshop live here, we will be directly answering them in the chat. So please make sure to keep them coming in. And so one great question that just came in a second ago as you were reviewing, Stephanie, the California Mortgage Relief Program. What if we do not have an escrow account? How do we create one? So if you'd like to answer that one.
Yeah, that's a great question, actually. So you must contact your servicer about establishing this. If you're currently past due, there might be some limitation. You may need to pay the arrears for taxes and insurance first. They'll direct you to this.
So again, as I think the big overarching common theme here in all of our slides has been to connect with your servicer. So they are so important. Another great question that came in, and I'll answer this one. What if we don't want the lender to change our time on the loan in a modification? I only want the rate to go down. So in this case, unfortunately, we and you don't have control over what exactly the term is that can be changed or which ones don't. It's all based on your personal situation and what is it going to take to get an affordable payment. Not only that, but what does your investor allow? So if your investor doesn't allow any change to the interest rate, then unfortunately that one's going to stay the same as it is. Or maybe they don't allow a deferral, a balloon payment. So it just really depends on your particular financials as well as the investor criteria. So another really good question. You guys have been awesome so far with these questions. How can I find out who my investor is? Steph, if you want to answer that one.
Yeah. So again, your servicer is very important in this. You can ask your servicer. Or if you think it's Fannie Mae or Freddie Mac, look up your loan with the links provided. But again, asking your servicer is the easiest way.
And again, reiterating communication with your servicer is so important. So I'm going to hold the questions for now, but again, like I mentioned, keep them coming in. We'll keep answering them directly here to you, as well as for everyone to be able to see them. But please make sure to keep asking your questions. That's what we're here for, as a resource for you guys, to help and understand what your options are. And hopefully through this presentation today, you guys have been able to have a little bit better of an understanding of it. Again, thank you guys for joining us in our homeownership conference. Thank you to Silicon Valley Bank for sponsoring our workshop today and sponsoring our conference as well. And again, we hope to see you soon. Thank you guys.
Thank you.